Hi, welcome to the STG podcast, where we speak to business owners, entrepreneurs, and people in fitness and health. Today, we have Fernando Castillo, a really good friend of mine since childhood, and someone who really does stocks and cryptocurrency. He's dived into a lot of education about it. He even has his own website, homeincomeboost.com, where he has his own watch list, and you can check that out. So, hopefully, today, we all learned something. Man, so we've pretty much been together all day.
Yeah, we got a good workout in.
Yeah,
Started the day off right.
You killed me with that one.
It's alright. You probably needed it.
Yeah, no, I did. Absolutely did. I like pushing that boundary to figure out where you're gonna quit. And
you were about to quit.
So you had me doing, what was it, 2 laps, for which I don't run.
That was the warm up, yeah.
Yeah, that was the warm.
Yeah,
that was the warm up.
Yeah.
And then I think I got all the way through round 2 of the, what was it? It was burpees, lunges for like 20, and then 10 to 15 push-ups, and then lunges back.
Right. And
then you repeat. Yeah.
4 rounds of that, and then a lap.
Yeah, and I had to, cut that off to 3.
Yeah.
Yeah.
You had to tone it down a little bit.
Yeah.
Which is fine. Like I said, it wasn't a race, so.
No, I was like, what in the world is this man on? But no, I really like that, and I'm like I said earlier, if you want to ever do it again, I'd love to.
No, yeah.
But
if you're usually,
I think my body was in shock. I was like,
you're gasping for air.
Yeah.
Yeah, I feel you, man. That's when I started doing stuff like that. It was the same, but
Yeah.
you get used to it, and you start, pushing yourself harder and harder and harder. Like what we did today was like a warm up for me.
Yeah,
the whole thing.
Well, I could tell it was a warm up.
Yeah, for you, that's why I was just like, tone it down a little bit.
Yeah,
don't kill yourself over
it.
It's not a race. Go at your own pace. Yeah.
But I was like, all right, let me keep up with them for this pace. And then I'm like, there's no way I can keep up with them, especially knowing what we were going to be doing after.
Yeah.
Or not knowing what I was like, nah.
Yeah.
It's
good.
I was looking at you from the distance, and then you turned around so disrespectful and started running backwards. I was like, no.
Nice. Just checking on you, man. Make sure you didn't die on me back there,
I love it. But so can you tell the people who you are? What is it that you do?
So my name is Fernando Castillo. I'm a car salesman. I work at Now Sales and Service. I've been doing that for the last 9 years. So, I'm also into trading stocks on the side. I got into cryptocurrency in 2017. In early 2017, right before there was that big pop at the end of the year on that market, and I got my website that I told you about.
Yes, plug that, please.
Yeah, homeincomeboost.com.
Say that again.
Homeincomeboost.com.
Okay.
So I just post. Really, I've been putting more content on trading on there because I'm more into that aspect of it. But the website, I made it just to put a free watch list out there, so other people can see what I'm looking at. So I give more than just entry prices, like kind of like my thoughts behind the trade, why I'm looking at that stocks. I'll put like links to relative content and where I got my information from if anybody wants to look at the resources. And the other half of the website is meant to document my journey into like affiliate marketing, because I'm trying to get into that as well. It's kind of funny, back in 2010 when I first learned about it, I was actually trying to get into it and figure out ways to do it, and I gave up on it. I was younger back then. I was 20 years old, partying,
right.
Didn't really put the focus I needed to put in it at the time. So I kind of like left that fall off, and I'm just like picking it back up now recently, like probably like last year. So I took this course that kind of basically showed me how to create a website from scratch. So I was, and it was like more of a community base. And obviously there was like a training path that you could take that walk you through the steps, and then walk you through the steps through affiliate marketing as well. Also, because it's really the point of the website is like you can just have a blog and just post your content on there and not even monetize it. But obviously for me, I want to have another little side stream of income where I'm just putting content out there, and it just kind of like pays for itself over time. The website's fairly new. I just opened it on, I think, in November. I want to say November of last year.
And I thought it was dope.
Yeah,
the amount of information that you put on there, the way that you listed everything, and then I was like, holy shit.
Yeah, it's everything that is on there, all that content, the way the website looked, I did all that. I wrote, all the watch lists. I wrote all the content on there. I outsourced 2 articles to people on what is it, Fiverr? Yeah, mm-hmm. Fiverr. Just to because obviously writing, work, relationship, working out, all of that stuff is very time consuming.
Exactly.
So when I come home at the end of the day, I'm like, oh man, I gotta write this and finish this one up and make another page and post this up, and it's just like you only have so much time in a day. So I try to outsource the some of the posts, like a new post that I wanted to put up on the website. And like when those people like wrote, I think I paid like $30 or $40, somewhere around those lines, for both articles for them to write. And like at the end of the day, when I got it back, I still had to go in there and edit it, and
at least most of the work was done. You just had to
most of the work was done, but what I learned out of that was like, nobody's going to really write the way I want them to write.
Of course.
At the end of the day, you're kind of just giving them notes, how you want it structured, what to mention, what the tone should be in the article. But other than that, once you get it back, if it's not 100% like you like it, you got to go in there and touch it up. And instead of me going back and forth with them and telling them, hey, do this or do that, and then keep going back and forth with them and be like, oh no, it's still not right, or this is right. I could rather spend that time doing it myself and, put it in the effort. Right. And like this whole thing, and like even with trading, I told you this before, like it's not about how quickly I'm going to monetize everything. It's more about the journey, like how the process, because the process is really what's going to make you grow over time. You'll have experience. You'll know how to do this. You know how to do that. Like I didn't know anything about building a website 2 years ago or a year and a half ago. And this is like the second website I made. I made one for fitness, which I let that go. That was just kind of like a test dummy.
Right.
And then I was just like, there's, and it's just like niche based. Like this is more like obviously making income from home base, right. That type of niche. The other one was more fitness, but fitness is very broad, so and this is kind of broad too, making money from home. There's a bunch of other ways to do it, but I'm mainly just focusing on trading stocks on the side and getting into affiliate marketing eventually. And if anybody doesn't know what that is basically you take somebody's product or service, you create content around it, or you advertise it for them, and then when people buy through your affiliate links, which looks just like a regular link,
mm-hmm.
You get a commission.
Right.
So
I kind of touched on that on my last episode. I did like I think it was like a 30-minute episode. It just talked about affiliate marketing and how, because with the podcast, I wanted to get into that where I just had little links and you make
do that, like
15% of the sale, right, or whatever it
like
is.
I was telling you, like you have equipment here that you use, mm-hmm. and then you could post your feedback about it.
Right.
You could even start a little blog, a free blog, and just post feedback about the equipment you use, do a review about it. And when people find that, regardless if they know it or not, they click on your link. It is a law now that you do have to have a disclaimer on the page, letting people know that there are affiliate links on the page.
Mm-hmm.
So if they click on them, you'll get a commission. You do have to disclose that. But basically, you could do reviews about your products, or you could just recommend it. And if people, click through your links and it links them to Amazon and they buy, a microphone, or they go and buy more than just a microphone, not just a product that you review, but they buy other things. And that one shopping cart, you still get all that kickback, because the way affiliate marketing works is like they give you, when somebody clicks on your link, it downloads a cookie into your browser. Right. So that cookie stays on your browser for like 30 days. So say somebody clicked on it, that day they read your article and they didn't do anything. Well, if they go to, let's just say, Amazon later, and a week later, and they buy something, you'll get some money out of it because that cookie's still in there. Right. After 30 days, it expires. And like every company has different time frames of how long that cookie will stay in there, but usually it's like 30 days. Yeah.
Something I've noticed a lot more recently is, as I go shopping on different websites and everything, is that there are, like, it's asking you, like, do you accept these cookies? And I'm like, what in the world?
Yeah, it's that's another thing too that came out recently, is that if you have a website that collects that uses cookies to collect data, you have to disclose that. Anytime you go to a website now, it'll have a pop-up saying, hey, these are, you have to agree to our cookies in order to browse. Some of them are really annoying. They won't let you browse the website unless you agree to it.
Right.
Other ones, they give you the option of decline it, so the cookies don't kick in and they can't track you. Yeah. But that's how all these tech companies start tracking people. They start putting cookies in your browser. They know what you're looking at. They know your shopping habits.
So that's Instagram. Yeah, that's how Instagram figures out how to. Yeah.
There's other things other than cookies that track that type of stuff. And I learned about this stuff over time just by, obviously that
research.
Course, research, the course that I was in, and explaining all that kind of stuff to it, and I found it interesting. So yeah, the website is right now, like I said, there's more content on there about trading stocks than there is affiliate marketing. I'm just doing like product reviews mainly on
but the other end. But you update it weekly, right?
I try to. I'm not as consistent as I would like to be. I think my last post was obviously a watch list, and it was probably done at the end of last month, I want to say. You
did one for 8/1, if I'm not mistaken. So I try to check up on it.
It could have. You could be right. Yeah, you could be right.
Yeah,
look at it, man. I like I said, I'm not as consistent on it as I would like to be. I wish I had more time, but for me, the watch list, the more you do it, the quicker you could do it. And like I could post charts on there, my ideas. It's just nice having it's like a home online. Right. You could really, it's like a hub. It's like your own little universal hub, and you can eventually, like, I want to open up a trading account that is kind of sketch, and I don't recommend anybody doing it. I mean, I've done my end of research, but I want to open up an account with a broker, mm-hmm. not in the U.S., so I'm not under the PDT rule, which means if you have $25,000 or less than $25,000 in a trading account, you can't make more than 3 day trades in a day. So that limits the amount of opportunities I could take advantage of. So I don't like that, so what I want to kind of get in the habit of doing is, like, on my days off on Thursdays, which is usually my day off during the week, I will, I want to spend probably like the morning half and day trade and make a couple $100, with a small account, and grow it over time. Once it gets to the point where I have enough funds in there where I could actually fund a U.S. broker and be above the PDT rule, I'll pull those funds out of that overseas broker and put it into a U.S. brokerage account and start just day trading from there.
I like the hustle.
Yeah, it's like it's like I said, it's a process over time, and if you're like in a hurry to do everything to make money and do this and do that and rush it, you're not really gonna learn anything. Yeah. You're not gonna gain anything out of that. It's better to just take the experience in slowly, learn from it, learn from your mistakes, and grow over time, and eventually you'll get there. So it's definitely like like I said, it's definitely like a journey. That's the way you got to kind of look at it. There'll be ups and downs, but eventually one day you'll wake up and you'll be at that point where you want to be at.
Yeah, so, you're talking about having $25,000 to mess around with.
That's unfortunately the amount of money you got to have in a day trading account in order to make as many day trades as you want.
Well, if you have more days like today, I think you said today you made $200 doing nothing. So
yeah, it's from a position I had open from like 2 months ago. It's a $300. This is not stocks. This is in cryptocurrencies.
Oh, okay.
But it was like a $300 investment, and yesterday I think I sent you a screenshot. It was like $2,400, and now it's $2,600.
Right.
So I just slept, and I just looked at my phone just now. It's up another $200. So it's a $300 investment that pretty much
doubled.
More than doubled.
Yeah.
Yeah. So it's I always look at it as a way like I could have all my money in the bank doing nothing, or I could put it into these, put a little bit of money in these, cryptocurrencies that I think have potential, and you never know, Like if I just left those $300 sitting in my bank account, it'd still be $300.
Something
versus $2,600, what it is right now.
Something that I was kind of like looking at today, through a friend, and this is one of the mistakes that I made, and I don't think it's a huge mistake, but it can be costly. He was like, "Oh, look into this stock," and then I was like, "All right." I looked into it, and it was a Workhorse.
Yeah.
And like they jumped, like I think they like tripled their stock in like a couple days.
I seen them, yeah.
And then I think it was like $9, and it jumped up to $20.
Yeah.
And then I was like, man, I got in way too late, like for me to jump in. But like right now they're kind of in that same trend. So I'm like,
so I'm trying to find the ticker on it to pull it up on here, but I can't remember it. Anyway, yeah, I saw that one run it up, and I wasn't really I didn't pay attention to it too much. It was just something I missed out on. And the thing is that I learned over time with trading is that there's something called FOMO. That's fear of missing out.
Yeah.
That's what everybody likes to call it.
Yeah.
But anyway, when you get that feeling, the best thing you should do is just not do anything. Because more times than not, if you buy off of that emotional aspect of it, 9 out of 10 times you're probably going to lose some money, because you got in at a very high price.
I got the ticker for you.
What is it?
WKHS.
Yeah, so see, it's back, it's hanging around $15. So
yeah,
let me pull up the daily chart on this guy. So that's where it topped out. It was $22.
Yeah,
that's a crazy run. And this type of run, I wouldn't. If I would be buying this right now, I would trade it. I wouldn't be investing this on a long-term aspect of it. Again, I don't know much about this company. I don't look at their filings. I don't look at their balance sheets or anything like that. But just from a technical point of view on it,
right. Well, something you were saying was that you don't really, and when you're doing your trading, you're not really looking at it as a long-term standpoint for some of them.
Yeah, because trading is not. I mean, there is trading where it's more long-term, but for me, I have an account for swing trading, and I'm gonna open up this broker account overseas for day trading, of course. So the one that I have right now that I've been actively trading on is it's on the platform Thinkorswim with TD Ameritrade. You could open up an account with them, and they give you a free trading software, which is really nice. It's really good with the charts. And I've been using it since I got into it. I got into trading, so it's like the platform is my go-to. It's not the best, it's not the fastest for day trading. I don't recommend using it for day trading. This is a great platform for swing trading, or doing some long-term trades, or just having a tool laying around that your broker gives you just to look at charts, do research, and it's really nice. It's nice that they provide you with that. But yeah, I don't get into, for me, and everybody's different when it comes to trading. Everybody, I can't tell you. I could tell you, and I can teach you how I trade, but there's going to be a point where you're going to start to take information that I give you, and you're going to develop your own style of trading.
Right, absolutely, adapt.
Yeah, everybody's different. Everybody has different personalities. So I've been focusing more on swing trading, just because, obviously I'm employed. I have an employer, so I gotta be focused at work. But on the side, I do make little small trades here and there, hold them for anywhere from like a couple days, weeks, or months. And if like they get to a point where I'm in profit and I think I should be taking that profit because it's getting to a certain resistance point, which is, if anybody doesn't know what resistance is, it's a point where the stock has trouble going past, like the price has trouble going beyond that point.
Yeah, like with this one, it went up to 22, and then
that's where it peaked out at.
Yeah.
It hasn't gone above that, so right now it's consolidating around $15. This is workhorse that we're looking at over here. And like for me, right now if it's in a no trade zone right there at $15. I mean, $15 is a big psychological number for people. It's a big whole round number. But if I was looking at this and considering to trade on it because I knew something on it, I did some digging, I found something interesting, and I think I have more potential to go up, I would probably take a small position on that just to see how it will play out, and if it goes my way, go in full size eventually and have a good average. The thing is with trading is that I learned over time is mainly just about averages. Like, you don't want to, especially on swing trading, you want to be more patient with your entries. With Thinkorswim, you could put a limit order in there and just have it sit there for as long as you want until it fills. So, like for example, if you see that yellow line that I drew right there, 12.35, let's just say I wanted to get in at that price point, I'll put a limit order for that. So once the price gets down to that point, I get filled. And from what I'm looking at it right there, it reduces my risk. So and the thing is with trading is that you don't want to you never want to put all your money in one basket. Right. Like I have like 4 or 5 positions open right now, but I'm not, and they're position sizes that I'm comfortable with. They could swing, a couple of cents, maybe even $1, every day, and I'll be okay with the movement. And obviously I have a stop out limit where if it goes below a certain point,
right? So you don't lose,
yeah. Right. It's all about really like just like money, managing your money. Making your winners bigger than your losers. I started a swing trading account. It was actually a stock that I had, a marijuana stock that I bought. God, man, I want to say a couple of years ago, probably like 2015, somewhere around there. I can't remember it, but I bought it like under $2. I bought some under $2. I bought more like in the low 2s, and that thing flew all the way up to like, I think like $12 or something. Let me pull it up. It's called ACB, Aurora Cannabis, and this is like when it had a reverse split. So it's not, the chart isn't as accurate as it used to be.
Split is when they divvy up the stock, right?
Yeah, they divide up the stock. So like right now, I forgot what kind of split they did, but for example, like if you had like, let's just say you had like 5 shares, just to make it simple, just if you have 5 shares of stocks and it's like 5-to-1 split, then for those 5 shares of the stock that you have, now you have 1 share when they do the reverse split. And then what that does is it makes it look like the price has gone up, but realistically everybody has less shares, but there's just a higher price of it because everybody's shares got converted to smaller portions of shares, so it makes the price go up, from there on out. That's the way they open it up on the market when they do the reverse split. It doesn't mean you didn't win any money, you didn't lose any money. You're just you still have the same amount of valued investment in there. You just have less shares now. That's
what Tesla and I believe it was Apple.
Yeah, Tesla, Apple. They've done those before. And what it does is just especially with Tesla, I think they need to do one soon. Just it'll lower the price of the stock so it becomes more affordable for other investors to get into. Apple has done several reverse splits before in the past too. When and stuff like that, if you're like a swing trader, that's the kind of stuff you kind of want to avoid. Knowing that kind of stuff ahead of time, because it's when something does a reverse split, for me it's like never good. The stock always ends up like tanking most of the time when they do that kind of stuff. So for me, like I was saying, like I was very, let me just say this, out in Aurora ACB, I was very invested into it. I was thinking like, like stock, like pot stocks are hot, this thing's gonna get legalized soon, this is gonna go to the freaking moon. So I held it. I held it all the way up until they got, I can't even see it anymore because they did the split, but I think it got to like $11 or $12, somewhere around there. I sold when it got to like $11.33, $11.40 to get my initial investment back, which was $2,000 that I put in there. And then I let the rest just ride. I still had like 950 shares of it. And I was just let it do its thing. And then eventually over the years, it came down. And, I was just like, God, man, this thing was like worth like 10 grand, and now it's like, worth less than 2, right. Which is still a really good profit on a $2,000 investment, but it could have been a lot more. I lost a lot just by holding. So what I ended up doing is selling it, and I was just like, I'm just gonna trade, this small amount of money that I have, after selling the stock. So it was like $1338, $1,338 that I started trading this swing trading account with. And last month I did a couple of trades and I got it up to 2,400, so I almost doubled it, nearly doubled it. And now it's like back and it's just slinging around like $2,000 right now. So because I have these other open positions right now on some biotech companies that are, biotechs are really sketch. But they're kind of hot right now just because everything that slaps a PR out there with COVID-19 or mentioning it or updating their vaccine. Hey, this vaccine's in phase 2 or phase 3. It freaking spikes, like crazy. So I'm just trying to get a meat of the move on that. It's hard to pick bottoms. It's hard to pick tops on stocks because you really don't know when they're going to top out and bottom out. But just by looking at charts, you have a pretty good idea of where those areas may lie, and you could place trades. So yeah, this account has grown since I started actively day trading it, but the goal for this one, I was just like, if I could flip this one, I'll probably increase my position size, expose a little bit more on each position just to grow it a little bit faster. So it's really, there's the thing about trading is that a lot of, like I mentioned this before, a lot of people don't get, and it's not talked about a lot, is the psychology of trading. And then the emotional aspect of it as well also. Like when I start feeling greedy, I want the stock to go up another dollar or another 50 cents or even another 10 cents.
Right.
Because, I want to get, it's already at my profit level, and I want more.
Right.
Most of the time, if I overstay, it'll decrease my profit target. Like it'll go below it, and it's just like crap. I should have just taken it.
Yeah.
And the next thing you know, it keeps going further down, and it's just like, shoot, man, I just gave back some gains, and it's just like, I should have just gotten out where I planned on getting out. And that's the thing, you gotta have a plan before every trade. You gotta know why you're getting in, where you're gonna get in, where you're gonna take profit, and where you're gonna get out. Because if you don't have that in mind, you're trading kind of like without any guidance.
Yeah, blind.
You're kind of, in a way. Like for me, if I don't get out when I say I'm gonna get out, it turns into a guessing game. Right. And you don't want to turn it into a guessing game, because then you get emotional. And when you get emotional, you make mistakes. So for me, if you have a plan on a trade, follow the plan. You follow the plan to the T, because if you ignore it, more times than not, something's gonna go wrong. You're gonna end up losing more money, or you're gonna end up taking less profit than what you planned on to. So you always gotta have, I always say, like, if you have a plan, it takes the emotion out of it, because you already know what you're gonna do before you can get in the market. Right. And if you just follow that, it makes trading a lot less stressful, because it is very stressful. And it makes it a lot more.
Every time I get an alert about the stock going down 5%, 10%, going up 15%, coming down, I'm like, why does this keep sending me an alert? Like, for the most part, like, you said there's different styles, and for me, I'm investing in order to get out eventually. Mm-hmm. So I'm looking at different stocks that
have long-term potential.
Long-term potential, that, or I have some stocks that I'm like, okay, I'm going to put it in hoping that they either get this contract with this company for which is then going to then shoot them up. Right. Or, they got an advertisement that I know is going to, like, supposed to be a big boom. Yeah. So that's where I get in most of my trades. It's not, I don't do the day trading. I don't have time to do the day trading.
I don't recommend anybody starting off with day trading like I did. I started off day trading, and it was just like, I wish I would have looking at it back now. I wish I would have started swing trading, because I just started getting more comfortable with swing trading, because I started day trading, and when I started swing trading, I was still in a mental day trading mentality. I was just like, I gotta get in and out. It's just like, no, you're holding this for a couple days or weeks or a few months to see what happens. You know, it's not like you're getting in and out like continuously, because you gotta be quick on day trading. If swing trading is a little bit more laid back, if anybody's trying to trade stocks, definitely test the waters with swing trading. It's a little bit more laid back. You could still work, check the market every now and then, see how you're doing. If you're at your profit target, get out. If you're at your stop loss target, get out, and then reanalyze your positions. So like I have, like I was telling you, I'm very simple when it comes to trading. I don't complicate things. I don't use indicators. Well, I do use indicators, but very a minimum amount of indicators. So I use different indicators for swing trading and stock trading, but really when it comes to stock trading, I use one indicator, or one study indicator, and then I use two on swing trades. I use the 13 EMA. Looking at the daily charts for swing trades, and then I look at the RSI on the daily charts when I'm swing trading. For intraday trading, I always have the VWAP.
What's that?
It's like the average volume. It's the average trading volume for the day. So
VWAP?
It's called VWAP. Yeah, okay. Volume weighted average price. Okay. So with that, it's basically just a line in the daily chart, and that line kind of shows you, what the weighted average price is based off all the volume and the movement for that day. So I use that line kind of like as a guide to tell when a stock is bullish or bearish. Bullish is you want it to go up, bearish is you want it to go down. And the thing is that I look for is support and resistance. I always draw lines where I see support and resistance, and I always base my trades off the lines. And I found that to be the best way to kind of like approach it. It sounds simple, and it is simple. The thing is, when it comes to day trading, is following the plan and being patient with your entries, because you can get bored looking at the screen and you can make a boredom trade, and more times than not, if you do that, you're gonna lose money. So I have certain price levels that I look at, and if they don't get there, I just don't trade. Even if if I wanted to buy this stock at $3 and it went all the way down to $3.10, and then it started bouncing from there and moving in the direction I was expecting it to. I'd let it go, because I didn't get filled. I probably had an order sitting there, and it just didn't get filled, and by the time I noticed it, it's probably like not even worth the trade anymore, because I missed it. Right. And you're not always going to get every single one of them. I ended up chasing stocks sometimes where it's like, oh man, I didn't get filled, I'm just going to get it now. And every time I do that, it's just like, okay, like now my risk is 20 cents more than 20 to 30 cents more than my original risk level, which was like 10 cents. And every time I do that, I get emotional. I jump into it. I get that FOMO where you just want to get in it, and because it's going your way. Right. And the next thing you know, you get in it, and it's just like, oh, I got in where I was expecting to get profit. I mean, take profit. What the hell? Why the hell did I do that? And that's the emotional part of it, is that it'll blind you. You won't think straight. So you always have to, when trading, regardless of what type of trading, and any trader would tell you this, is that you always have to have a plan and a reason behind the trade. Because if you don't have that, then, like I said, you're just kind of like just winging it. And if you wing it, you're gonna get wrecked. You're gonna blow up your account. You put $2,500 in, $3,000 in, and next thing you know, it's like $500, and it's almost gone. Yeah. And it makes people want to quit. Like when I started trading, day trading, I lost like, I don't know, man, like I want to say anywhere from $8,000 to $10,000. Just like, I funded my account $2,000. Day traded, I was like, God damn, man, I'm just losing money, and then I get down to like $1,000, put another $1,000 in, get it back to $2,000. Losing money, the same thing, rinse and repeat. I just kept putting money into the account. I look back at it, I'm like, damn, I lost like $10,000 just, but at that time I was looking at it like, I'm gaining experience out of it. It was a very expensive experience. Yeah. But I grew out of it over time. I got more educated. I studied 6 months before I ever made my first trade. I studied my ass off. I was trying to learn how to read SEC filings, how to research companies, how to look for stocks, all that stuff. And I was like, oh, I'm ready. I'm just going to freaking hammer this thing like there's no tomorrow. And, I blew up several accounts, and it's just like, no matter how ready you are when it comes to it, you're going to make mistakes. Until this day, I'm still making mistakes, So it's definitely, until this day, I'm still learning as well too. And it's definitely like a learning experience every single trade, regardless if you win or lose. Like, you got to go back there, look at your trades, be like, why didn't I get out? Because you got emotional. You got to be really true to yourself. Be like, this is what I did wrong. Because us as human beings, we have a difficult time accepting that we are wrong. It's definitely always a learning experience. You're always learning. You never really stop, you know? And the market's always changing, so you always got to adapt. Like right now, you know, biotech's hot. You know, these EV companies are hot, you know, like Tesla.
Right. Something I wanted to ask you about actually was the ETFs.
Yeah.
Because I'm doing a different type of trading than most because of my schedule. Mm-hmm. So, what is your feeling about the ETFs? Those are
I don't really touch them. It's just, you know, I just focus on just regular stocks. I don't really touch ETFs. I mean, I will if one really looks attractive and I think there's potential there, I'll go for it.
Right. Because what it is it's a bundle, right?
Yeah, it's like you're getting a little bundle of everything. You know, like you know, you could get like there could be an ETF with, you know, like for metals. You know, so you're getting like different kinds of stock.
Gold, silver.
Yeah, gold, silver in it. Right. Copper, you know, different commodities are in that ETFs,
yeah.
and you
I
know,
saw
if you buy
real estate the other day too.
Yeah, so you know, there's different ones for each sector of the market, and it just depends. They're all, you know, there's several for each of the market. You know, you just gotta do some diggings and see how they're different. You know, what your money's going into if you do put your investment in there. So. It's like I said, it could be securities, commodities, in there, and it's just like a mix of them. It could be just different kinds of securities or different kinds of commodities or a mix of others. It just depends, you know. But me personally, I don't really look at that. You know, I know some people that do and are kind of big on it. Not me though. You know, I just look at stocks and. Stocks are more predictable in my point of view, you know. And the thing is, I don't trust companies. I don't trust. You know, I know there's Apple, Amazon, and they do great and everything, but I just have a really hard time trusting companies, and I think it's because of the way I started trading, day trading. You know, I knew everything that I was trading was crap. You know, I knew they were like pump and dumps, and I was just trying to take advantage of, you know, a piece of the pie. You know, try to get a little bit of profit here, there, and you know, when you first start out, it's very emotional. Put in that first trade, watching your money go up and down.
Yes.
You know, you're up. You know, probably like a few dollars to a couple $100, and then you know, as quickly as you went up.
That's what the first 30 days for me has been like.
Yeah.
I think I was like, my account said, I put $3,000 and like I took that from out of my, I had an app that, you know, cures money. I can't even think of the name of it right now.
Yeah, it like rounds up your savings.
Yes.
To like the nearest dollar or something like that.
Yeah. What's the name of it?
Acorns or Stash?
Acorn. It's the Acorn account that I had.
Yeah.
So I took that out, and then I looked at my account, and it said that I was up $100, and then I dropped from $100 to lost like 110.
Yeah.
I was like, but I don't think I've invested all my money into in that account yet. I think there's still part of the cash that I have in the account that I haven't invested.
Yeah.
So
see, like like I said, you're trying to like invest little by little over time.
Right.
And like Acorn's simple. It's a nice little app to get your feet wet. But you know what they have are kind of like ETFs on there. Right. You know, that's what you're putting your money in on that, if I remember correctly, because I used to have that app. I only used it for savings.
Yeah, that's basically what it is for me.
Yeah, I never used it for trading or investing. I just used it as a way to save money, and then I switched over to Stash, which is basically the same thing. And they're good apps for, you know, somebody who doesn't want to, for starters, you know, they like these apps, they kind of like, you know, already done a little bit of research. They tell you what kind of ETFs they have available, and you decide which one you want to put your money into. So for me, it was like an app that I just kind of used for savings. Like I had like $76 every week come out of my bank account, and get put into my Stash account. And I did that over and over and over again. And then next thing I know, like a couple months down the road, I have like $2,000 just sitting in there, and I would withdraw that money from my bank account. And I did that several times already, and it was just nice knowing that, you know, every week I was putting money aside to save up, and that really helped me save. You know, I use it more of a saving strategy with those apps than I did investing. I never really like put my money into anything on those because it's not my style. You know, it's not, they don't have charts, or it's kind of like more information about what you're putting your money into. So I would just use it as a savings, a way for automatic savings.
Right.
And, you know, once they got to a certain point, I would withdraw it. You know, every time I got like 1,500, 2,000 saved up, I would withdraw it, and just like, wow, it's nice, you know.
Right. Allow it to stack back up again.
Right. Exactly. You know, so.
Yeah, I didn't even remove all that money out of there. I took a portion of it because I said, okay, I'm gonna need something to build off of later.
Yeah.
And who knows, you know.
There's you know, there's other apps like Robinhood that are, in my view, like a little bit better when it comes to like stocks, or doing options. They're pretty good with options. They make it easier. But I really don't use any of them right now because of what's been going on. I kind of like pulled all my money out of Stash.
What do you mean? What's been going on? Talking about COVID or?
Yeah, COVID. You know, like just
Okay.
just you know, if Stash says, hey, you know, we don't have any money because everybody took their crap out, it's like,
right.
well, I want my money.
Right. Exactly.
You know what I'm saying? So, I mean, they're insured, FDIC insured, which, you know, they'll cover up to $250,000. If actually, you know what, Stash is not insured. I think no, they're not. Acorns, I believe, is.
Yeah.
So when I read that Stash was not.
Acorn is.
Yeah. When I read that
Stash
Stash wasn't,
like,
I was just like, yeah, let me get my money out of this.
Yeah,
Right now.
I think Stash, what they're advertised is like you can buy weed stocks, and then I think they talk about something about Acorn, but I don't like that flashy. Like I felt like that was their flashpoint. Like, oh, you can invest in marijuana. And
Yeah.
I'm like, eh.
Yeah. You know, like for me, when it comes to just trading overall, I'm always on, you know, the Thinkorswim platform looking at charts, or I'm on TradingView looking at charts, or I'm on my phone looking at charts. Bro, I'm always looking at charts. Yeah, it's like chart porn.
Right.
So, and I drive my girl crazy with it. She's like, I don't know what the hell is so freaking important about those damn charts. I don't even know what the hell you're looking at. What are you looking at? And I'm just like, you wouldn't understand.
Right.
I don't even bother.
Do you have an account for her that you trade for her?
No, she's given me money for me to put to invest money for her, and I've done that. But you know, it's not like a ton that she's given me. It's just something that she gave me to test the water.
To, you know.
No, she gave me like $700. I put it into Bitcoin, and it's worth like $1,000 right now.
Right.
So, you know, nice little $300 gain right there. So, you know, she asks me about it every now and then, and you know, she's like, oh, that's awesome. You know, when I tell her, hey, you know, you're kind of like break even right now, she's like, what the hell is it doing? Because she doesn't understand it, right. You know. So I told her not to worry about it. It's more like a long-term hold kind of thing. And me, you know, like I was saying earlier, I got into cryptocurrency back in 2017, and I did some risky stuff when I got into it. I had, you know, back then, I think you could do it now on Coinbase. I think they allowed it again, but anyway, when I first got into it, I was, you know, I was looking at these cryptocurrency and everything was moving. You know, Bitcoin was on the news, a lot of hype around it. My sales manager had like 2 of them or something, and he was making, you know, his portfolio was increasing by a stupid amount every freaking week. And I was just like, man, I gotta get into this. So I opened up a Coinbase account, and I was like, man, because, you know, being in sales, car sales. You know, I know how credit works. I know how you can leverage your money and all this kind of stuff. And I know, you know, I had a couple of credit cards laying around. So I was just like, let me, you know, instead of putting my money at risk, let me put their money at risk.
Yeah.
And, you know, yeah, their interest rates are like 20, 25%, but I don't care. You know, if it's going where I think it's going to go, I'll probably more than double the money and be able to pay it back. So that's what I did. I bought a lot of Litecoin. I had like 30 of them or 35 of them or something like that. I bought them all at $50. Some right under $100 when it broke $100, and I sold them like in like 280 or something like that, somewhere around there.
They were at 280, so you
288 or something like that is when I sold it. So, you know, for every, like, I think I want to say like I probably had like a $70 or $78 average around there. So for every $78 that the price moved, I doubled my money.
All right.
So back then, I mean, if you look at the chart back in 2017 for Litecoin, I think that thing just went straight up eventually.
Right.
And when it peaked out, I was just like, man, I should just keep holding. You know, I started feeling that greed.
Right.
But after, you know, this is 2017, and from my experience back from 2014 up to that point, it's just like, no, sell, because when you feel greedy, when you get this greedy, you end up getting a lot of profit back. And I'm glad I did sell, because it pretty much almost sold at the top. I think it topped out like at 3 something, and I sold like in the 280s or something like that. So
that's a good flip.
Oh yeah, it's a great flip. Yeah, I freaking, you know what, I spent like, I don't know, like $3,000 in $3,500 in credit cards just buying that. And I bought some Ethereum too and a little bit of Litecoin, and you know, I did something stupid too. But anyway, I collected the profits, and then I was just like, oh, I should pay these I should pay the credit cards. I should pay them off. And I didn't do that.
Yeah.
And that was my initial plan. Pay off the credit cards and you know, and
so what'd you do
keep the rest of
instead?
the money. Well, like an idiot, I thought, I was like, oh, I'm gonna wait until all this stuff, you know, drops, and then get back in when I think, you know, it's gonna start bouncing. Because you never know what's gonna happen.
No.
So what I ended up doing is I kept looking at these other cryptocurrencies, which were a lot more riskier, and I started buying those with the money that I made. And, you know, after...
Wait, with both the money you made and the money you borrowed?
Yeah.
Okay.
Yeah, it was stupid. But like I said, lesson learned, you know? It's like, I'm a risky-ass dude, man. Like, I'll take some risk, you know? Right. So anyway, instead of paying those credit cards off, I bought these other shit coins, everybody likes to call them. And they, you know, basically all the money that I made, I gave back. I kept like $3,000 of it. I cashed it out. I put it into my bank account. But, you know, I had, you know, I put all that money into all these shit coins, and everything was crashing. And they were crashing even faster because they weren't, you know, it wasn't Bitcoin, which is like the most valuable one out there. So they kept crashing and crashing and crashing. I'm just like, damn, there goes all that money, you know? And I'm just like, crap. Now I got all these credit cards, you know. So I'm more in debt now. I lost all the gains that I made. Right. You know, I had a little bit of money that I just put into my bank account, and I should have just put it towards the cards that I had to pay off. Right. Then I just held it in my account. But long story short, from there on out, I did a debt consolidation loan. You know, instead of holding all that interest on those credit cards and having a 25% interest rate that gets hit every freaking month, I just did a debt consolidation loan for like 9%. So every time I'm paying them, it actually, you know, it's actually paying down the account versus it's getting like 90% of my payments get eaten up by interest. You know, with 26% interest rate.
Exactly. So
I'm chipping away at it slowly. I'm gonna, you know, I have like a 4-year debt consolidation loan, but I'm gonna probably pay that off a lot sooner. You know, it's about to be a year next month. So, you know, I think by the end of this year, I'm probably gonna, you know, depending on how everything looks, hopefully the world's not collapsing.
Yeah.
You know, and money is still a thing. I'll I'll put it into I'll put a good chunk down on the loan amount, so towards the principal, so it lowers the overall amount that they could charge me interest on.
All right. So with this whole talking about money and how everything is going, do you think cash is still going to be a thing? Because in my opinion, I feel like
I think that I think everything's just gonna go digital.
Yeah.
I don't think, they always say in tradings, don't fight the Fed.
Right.
But I think there's going to be a digital dollar soon. Cash. I never carry cash on me. It's always credit cards.
Right. Credit or debit.
Yeah. And I think everything's going to get digital.
Mm-hmm.
It'll be a digital dollar. Venezuela tried to make their own cryptocurrency, the Petro or whatever the hell it was called, which was BS. It was just a scam. But I truly believe that Bitcoin is going to be like the universal money. If you look at the dollar chart, what it's done since the early 1900s up until this point, I mean, it just goes down.
Yeah.
If you look at Bitcoin's chart since it came out in 2008, it's done nothing but go up.
Right.
It has been the best investment, for the last 12 years.
Yeah.
So, the thing is that people don't realize is that when it comes to money is that, just look at what happened this year. We have a pandemic, everything crashed. The government printed trillions of freaking dollars.
And that's one of the things that bothers me is because I did a little bit of research on something, and the Federal Reserve is not, it has nothing to do with the government.
It's privately owned.
I was like, what?
It's privately
That
owned.
blew my mind. I was like, what, are you serious?
Yeah, it's privately owned. Private bankers, the Rockefellers, the Rothschilds.
Yeah.
all them.
I figured you knew something about that.
All day.
Yeah.
I'm a big conspiracy dude, so don't get me started on that end.
Yeah. I was like, how in the world is that even a thing?
Yeah, but those are the guys that control the money.
Yeah.
The big bankers.
They make $1 billion
control
a
the media,
day or
they
something.
control all this stuff.
Or
the
a month.
markets, the news, the media, all that. And, it's privately owned.
Yeah.
And the crazy thing is about it is that they came on TV and said, no, we can print as much money as we want. We can do whatever we want. We will never run out of money. So why the fuck do we pay taxes?
Yeah.
You know what I'm saying? Like, why are you taking my money then?
Right.
If you can just print as many as you want. I mean, obviously they're diluting the dollar the more money they make. And that's the other thing I wanted to point out to you is that
yes,
when obviously everybody has like a savings account or has some money put away. Even if it's in a shoebox or in your bank account, it doesn't matter.
Right.
When the Fed printed those trillions of dollars earlier this year just to keep the market from collapsing.
Yeah, stimulus.
I didn't have to spend a penny, of my money. But the Fed, just by printing all those trillions of dollars, my money is worth a lot less now than it was last year, just because they devalued the dollar by printing all those trillions of dollars. Like, they're wasting my money for me.
Absolutely.
And that's the thing. That's the problem that Bitcoin solves. It's the deflationary asset. There's only going to be 21 million ever mined. I think the last one is going to get mined is in 2050 or somewhere around there. But once all the Bitcoins are mined, there's no more to get. They're all there. And if you do the math, there won't be enough Bitcoin to go around for each millionaire.
Right.
So right now I own 1.3 Bitcoins. I'm trying to get it to 2. I long term, for me it's just an asset I think everybody should have. Nobody controls it. The government doesn't control it. No government in the world controls it. You can't shut it down. It truly is, in my point of view, the global currency, and I think a lot of people are waking up to that now more than ever.
Well, you can trade Bitcoin with other cryptocurrencies because then they match.
Right, exactly. What cryptocurrency traders do is that they don't trade cryptocurrencies to get more dollars. They trade other cryptocurrencies to get more Bitcoin. They trade Bitcoin against other cryptocurrencies.
Right.
So, like I was showing you on that trade I was doing, there's different charts. You can look at a US, like you have the Bitcoin chart versus the US dollar. You also have Bitcoin versus Link, which is the trade that I'm in right now that I showed you. There's Bitcoin versus Ethereum. There's Bitcoin versus Litecoin.
All right.
So those are the charts you look at. And you put X amount of Bitcoins in this certain price level. If you think it's going to go up from there, then you sell it when it goes up. Obviously, and it's the same thing as trading stocks. The cryptocurrency market is still like the Wild Wild West in my point of view.
Yeah. I agree.
The supports and the resistance levels are easily broken, and they're really I don't know if you'll understand this, but I call them wicks. Everybody calls them wicks, where the price will wake up to a certain level and then wick back down real quickly, like in a second or in a couple of minutes. So it's for me. I look at trading cryptocurrency more of a swing trading way of it, because day trading cryptocurrencies for me is not really worth it unless you're in these shady exchanges where they're giving you 10 times 100x leverage on your money, and they're the moment you make one wrong move, your account's wiped out because you're using more buying power than you actually have. So the thing when it comes to cryptocurrencies for me right now is just kind of I have a little portfolio I'm going to kind of hold long term. And eventually, when it gets to certain levels, I'll start selling. But I will always have one Bitcoin. I will never, because if you look at it, and this is what I was talking about with someone else one day, it's why would you sell an asset that keep appreciating in value for an asset that always depreciate in value?
Absolutely.
It's always inflated. So why would I ever sell my Bitcoins for dollars? Because pretty soon,
it's not going to be worth anything.
Yeah, you hear people talk all the time about, my grandparents, they were able to buy a car for $3,000 and it was brand new, and this and that, and now they're so expensive. But it's not that things got expensive. It's the thing is that our dollars are not worth what they used to be.
Right.
And like I said, that's the problem that Bitcoin solves. It's you're putting your money somewhere where the government can't get it. You could send I could send somebody money in China, and nobody could stop that transaction, from reaching the other person. It's a true decentralized platform where you could exchange funds to another person, another individual. Pay for services. If somebody wants to, I would take payment in Bitcoin all day over dollars. I'm getting to a point where I'm right now, every now and then I'll throw 100, 200, 300 into Bitcoin or a cryptocurrency that I think is worth the money.
Yeah, emerging.
And I want to set it up to where it's how I did with Stash.
Mm-hmm.
Every week I would have X amount of dollars go into that savings account for Stash, and it was just dollars, but every amount of money that I'm gonna get now, I want to start putting in little by little into Bitcoins or other investments that I find more suitable, because eventually for me if the Fed could just print as much money as they want, then what's the point of holding fiat, So yeah.
What I was gonna ask you was what's something, because we're gonna wrap this up. So what is a mistake that you've made that you would never make again in investing?
In investing?
Yeah.
A mistake. Just a mistake that I would never make again.
You're thinking of every mistake that you had.
Because it's gonna happen again.
Right, no, of course.
It's
Well, what's one that is avoidable?
What is one that is avoidable?
Mm-hmm.
really, none of them.
None of them?
Nah, you'll make mistakes.
Okay.
Yeah. I mean, one thing that and this is more like an internal thing for me. I always say your gut's like your second brain.
Mm-hmm.
So when I have a really gut feeling about something, it's usually right.
Mm-hmm.
So I've been acting more on my gut recently. Like, for example, on Link, when I saw the break, I think $5, it's all-time high. I was just like, this thing's about to run like crazy. And then that was my gut telling me that.
Mm-hmm.
I was like, you should buy this. And I bought that. And I'm glad I did. And now my gut is telling me the same thing about this other cryptocurrency, which is RLC, which is called iInsect. And they just broke, I think, $2. So I'm actually trying to get into that one right now. And I expect that one to probably go from 2 to 10.
Okay.
You know, so that's one that I'm going to take advantage of right now. Pretty much, I told you I sold some Link yesterday and locked in some profits. So the profits that I got from that, I'm just going to roll it over into that because that's about to take off too.
Yeah.
So just looking at it, the chart, technical side of it, and what I know about that currency, it's going to go. Same thing with Link. If people don't know what Link is pretty much like a oracle. It's an oracle that'll connect to other blockchains. So other like Ethereum will go to Link to get data.
Right.
You know, like hey, you know, like your data.
Coinbase.
You know, like you know, I think eventually like all these exchanges, and I think the stock market eventually is going to go into the form of blockchain, where it's like more decentralized. I mean, don't get me wrong. I think there's always going to be manipulation in the market, regardless of cryptocurrency or the stock market. But I think everything's going to get more decentralized over time. Like right now we have these cryptocurrency exchanges that, you know, are actual companies that put the platform up there, provide the service. But I think it's going to get to a point where like it's just a platform. Yeah, just looking for the next move, you know?
Yeah.
So.
Look, man, I appreciate you for coming through.
Yeah, man.
I've learned a lot from you. I appreciate you.
Yeah,
hopefully,
man.
I can have you come back and we can
link
up on link up on like something reoccurring, or you know, every other month. You know, you just come in and just talk about some.
Yeah, maybe next time I open up that broker overseas, I'll let you know how that's going.
Sure. Well, I appreciate you. Thank you for the workout.
You got it.
Astronomy, stop the riff.